Welcome to XM.com for today's Daily Market Comment by Mario Hadjikyriacos. I'm Christina Marujos. U.S. stock markets snapped a three-day losing spell on Wednesday, with the S&P 500 gaining on the back of a report claiming that American and Chinese negotiators are moving closer to agreeing the amount of tariffs that would be rolled back in a Phase 1 accord. The message for the market was that a preliminary deal hasn't been derailed at all, but rather that Trump was once again just posturing recently in order to maximize his negotiating leverage. That took the wind out of the sails of defensive currencies such as the yen and Swiss franc, but catapulted the likes of the Kiwi dollar higher alongside crude oil. Looking ahead, the focus remains on whether the White House will ultimately follow through with the December 15th tariffs. Clearly, both sides want to strike that deal. Trump needs a victory against China to tout before he hits the campaign trail, while Beijing needs some economic relief. However, sticking points remained, so it wouldn't be surprising to see more bricksmanship and tariff threats in the coming days, implying that risk sentiment could remain shaky and swing wildly. The British pound outperformed yesterday as incoming election polls showed the Conservatives consolidating their sizable lead over Labour, amplifying hopes for a majority government that moves Brexit forward and supercharging cable pulls. However, this is still a most unpredictable election, and if investors run ahead of themselves in pricing in a Tory majority, but the result is ultimately a hung parliament, then the crash back down in sterling could be ferocious. The Canadian dollar was the second best performer yesterday after the nation's central bank kept rates unchanged and downplayed the prospect of a near-term rate cut. The loonie also capitalized on higher oil prices. Today, energy markets and the loonie will turn their gaze to the OPEC Plus meeting in Vienna. Markets seem split about whether the cartel will deepen its production cuts to stabilize prices, as it would risk losing more market share to U.S. shale producers. Thank you for watching the Daily Market Comment here at XM.com.